This is Martin from Secrets, the channel from learning about trading and investing. Welcome to daily stock market analysis show, where we understand from the technical charts what happened in the market during the day and then plan for a better trade for the next day. It's April 26th, Friday 2024. So we had a very volatile market in the first half, and we had a big breakout, both indices, and both of them closing positive and breaking out of resistance. Let's try to understand more from the charts. We'll come back here to the slides after we look at the charts. So look at the playing candlesticks. Wide range bullish engulfing candlestick on the Nifty. Daily charts were same. Wide range bullish candle on Banknifty also, and it's engulfing pattern also. Extremely bullish candlestick patterns. Last 3 days of candles completely engulfed by Nifty's candlestick, and it has taken out the gap resistance that is there. Banknifty also has taken out the gap resistance that is there. So it has bounced, taken a dip initially and bounced up from the 20 exponential moving average on both of them. Right, so extremely bullish pattern, and let's try to understand where the support resistance is decided. So as of now, it was a 5% retracement, and now it's done 70%, 75% is recovered just in a matter of 4-5 days. Right, Nifty also same. It had done a retracement of 5% and then it's retrieved almost 75% of that. Now heading towards the all-time high back again. A quick short retracement and then bounce up. And the first resistance obviously would be all-time high 22,775, and after that market could head up to 22,900 and then 23,000 big rounding number. So that's where the resistance. So tomorrow probably it may be attempted to take that new all-time high, possibly, or it may consolidate after such big moves. Either that can happen, but the direction seems to be clear, moving upside. Banknifty also, it's in a trend line channel and it's heading towards, can go as far as 49,500 nearby levels, and the immediate resistance on the upside will be 49,000 big rounding number, and then taking out 49,57 the all-time highs levels, and then 49,500 upside. Downside, the supports on the Banknifty can come in at 20 exponential moving average at 47,800, the major support, and before that 48,000 could actually see support as well, and then 47,300 is where the 50 exponential moving average is there. After that you have the 47,000 big rounding number supports, and then 46,734 is where the 100 exponential moving average support is there. We have not seen the downside supports for the Banknifty, so the first support will be 22,350, which is the 20 exponential moving average support, and then after that you can have a gap support at 22,180, and then same place nearby 22,148 has got the 50 exponential moving average support. And 22,000 rounding number is there close by. So 22,000, 22,200 is a good support zone after if the 22,350 is breached. If that is also breached, previous high is at 21,700. Before that, you have the 22,000 big rounding number support also coming in. So that's support resistances on Nifty and Banknifty that we are seeing. So we'll just go back to the slides and then wrap it up. So market was kind of forming small body candles for the last 3 days after the big breakout that happened on last Friday, and this Thursday it had formed a similar big breakout engulfing candle and closed positive with 168 points, 0.75 bigger more than the Banknifty, which made 360.06 and 0.63% up more, and just for closed below the 48,500, and Nifty at 22,570, both of them are above the 20 exponential moving average. We have a 35% rally from last 1 year, and we have a 27% rally with the Banknifty means last 1 year. So it was a half volatile day, taking initial gap down and then spiking up and then trending up. And remember, all this happening at very low, extreme ultra low volatility, and remember today's a monthly expiry for Nifty. Alright, suppose level we already seen, so I'm not changing that. So what goes in favor of the bulls and the bears? So 5 days of positive close, and the previous day's close is great, and 75% retracement has happened in just 5 days. For 6 days it had retraced 5% nearby, so it's completely, almost everything is going to get recovered. So that's positive factor. Wide range bullish candle is extremely bullish. Higher low has been maintained since last 4-5 days. Since concept is not breached basically, so that's positive. 20 exponential moving average is where the support was taken today and the bounce happened. Normally is bullish on the RSI on the Banknifty, but Nifty is heading towards that sideways and it's almost there. This size 60, if we put it as a benchmark, it is set to reach that. So ADX is already crossing over their zones, just crossed over daily positive zones. So that way, the trend is bullish on Banknifty and yet to happen on Nifty. Well, the bands have started at the beginning of the expansion. Just see that one of the bands. Switch on the bands, you can see that small beginning of an expansion has happened, not a confirmed one, just beginning to expand. Right, so it's consolidating only primarily, but the beginning of an expansion has indicated. So it has a bullish bias and means likelihood that it can go upside. And sectoral indices, if you see, almost all of them are green except for realty sector. Right, moment of the daily charts of the sectoral indices, if you see, almost all of them are bullish on the sideways one, except for the IT sector, which is still dragging in this NPR response on the daily charts. Heavyweight stocks that contribute maximum to index is also green day, except for the Kodak Bank and HDFC Bank. Kodak Bank had some RBI restrictions that came in and then it fell more than 10%. HDFC Bank also is flattish, correct. Otherwise, all the others heavyweight stocks are all green. So this is the momentum. Only the Nifty and the Kodak Bank is the bear zones on the daily charts. These are all either sideways or bullish. Major views indices are actually recovered 2 to 4%, from a 6 to 8% of retracement that happened from the top. So retracement could come in, but for now it's on the bull side. Probably hoping that that could be the bottom that is found somewhere there with that 6 to 8% retracement, and probably it may be reversing off to the upside. It's like how we are doing. Until then, it goes in the bull's bucket. Now, what goes in favor of the bears is that momentum of the Nifty is had to climb over that size 60. Right, so we're going to wait for that. That is, so until that happens, we cannot be. Until that happens, and the momentum also settles above the RSI 60, we cannot say anything. So the VIX has spiked up today, despite the fact that the market moved up. So that could probably indicate that today's move was not real. Probably some rollback might come in tomorrow, because the VIX was supposed to have cooled off, but it has spiked up instead. And VIX had an initial crash of around 20% that happened yesterday. So it's 10.72, big crash of 20% that happened day for yesterday, which is quite unusual. And we'll have to see whether the VIX is. So whenever it is falling down to the very bottom, there is high probability of a spike that can happen. That's exactly what happened today. But it is contrary to what the market did. So that way, it goes in favor of the bears, with the potential for the real move may not sustain. So that's what the India spike when the market is moving up is indicating probably. Dollar is going, dollar index is spiking up. It's red today, but still at 106 levels. Rupee also has been weak for our 83.3, being managed by the central banks. Crude oil is green, 8% cool off has happened, but still it's set to, it's spiking up and showing some green. It's 83 levels and very close to the top of the trend line channel. Gold has been recently at the very all-time high. 6% of cool off has happened, still showing green, and it may once again head towards the another all-time high. So there is a probability that equity money is getting transferred to safer havens like gold, indicating some concern for the bulls. So as for net sellers, the April 30,000 crores or something has already happened. Today's data has not come in, but yesterday they had sold 2,500. So total April alone, the entire April they had been selling, nothing but selling. So only the FI mutual fund money that's holding the market, and they had been buying consistently. Today's data is coming or not, we'll just quickly refresh and see. No, it has not come. So Fyers has been sellers the entire April month except for 2 days or something. So what's the verdict? So market has been breaking out. No, not has been, had broken out today after some pause of 3 days after the last Friday's big reversal. So it's a 5th consecutive day of positive close, confirming that the bounce is for real, and 75% of that recovery of the retracement has happened, and now it is getting very close to the all-time high once again, about the next moving average with the engulfing bullish candlestick. So market is still bullish, you can say. The trend and the momentum for the Banknifty is absolutely gone in the bull zones, but for the one of the Nifty, you'll have to just wait a little more. The bull balance is showing expansion on the upside, beginning, not confirmed. The beginning of expansion, there's possibility it can go higher, low, higher, high patterns. All this indicates like there is a probability of a breakout that can happen. So investors, the number of withdrawal, there is a dip happening in a bull rally. There are opportunities for you to invest in small quantity, in chunks, in good quality, long term SIP mode investment. For traders, what is required is breakout. breakout has happened today, but is it confirmed? No. You have to wait for that confirmation to happen a little more. Probably tomorrow will tell you that confirmation, and then the direction trades if it happens. That's how we'll play. And then you'll have to play the sideways because short-term consolidation is still happening. Neither is breakout confirmed. It's only the first double breakout. I'd wait for another day. So non-relation trades and spreads is what is working. Provided you manage the risk with portfolio level stop losses, and then having hedge positions always. We're taking out net positions. And recently there has been at the very low volatility in the last several days, there has been big spikes that is happening even in the Nifty on the expiry days. So I will stay very cautious on that fact. There are news around firms like Chain who are pumping and dumping the indices, index stocks, and creates big up moves and down moves, and at the same time they'll play opposite side in the options and make a lot of money. So that thing kind of news is floating around. I'm not sure if that's true or not, but there has been unusual spikes and very unusual spikes, 100 points, 200 points up move, and then suddenly 100 points up down move, and all this kind of violent moves. If you look at today's candlesticks in the first half, you'll understand that this kind of novelty is very unusual. Does not normally happen on expiry days on Nifty because of the high liquidity and stable structure of the options so far, but that's that's no longer there. Nifty is also behaving like Banknifty or Nifty or Banknifty even. Banknifty is more disciplined comparatively as compared to Nifty nowadays. So we slightly alert on before we try to understand what's really happening. So there's a Fed meeting that's happening on May 1. May 1 is a holiday, so next week is a truncated week. Outcome of that could be reflected only in the next day, May 2nd. Earnings news flow that keeps coming. Middle East crisis is not fully settled. Election exit poll outcomes that comes in next phase, and all this could make the market jittery, and they have to be cautious and careful about that. All that you can do is manage the risk cost is all technical study on probabilities of where the risks and probabilities of where the supports can come in. That's all. That cannot help you full unless you have risk management properly taken care. Right. So that's all I have. Happy trading, happy learning, happy investing. Bye bye.